Good morning, everyone, and good morning, Elif. It's a pleasure to be with you today and to have a conversation with you. So for those who don't know, Elif Bilgi Zapparoli is a managing director at Bank of America, and she's head of the international client strategy. But more importantly, she was named by American bankers as one of the top 10 most powerful women in finance. So we'll hear from someone who has a lot of power this morning. Elif, my first question to you is, you work for Bank of America, so a leader in international institutional finance. So what stands out for you as important and crucial in the field of crypto?
Thank you, Sebastien. And I want to start by thanking Mike and team for having us at Blockworks. It's my first attendance here, and it's really wonderful to be a part of this event. So, Sebastien, what's interesting from a TradFi perspective, let's say, when it comes to digital assets and crypto is the comprehensive front-to-back approach to financial services. The way we think about it is that there are potentially three areas that distributed ledger crypto touches that are pretty much overarching of everything that we do in financial services. If we were to start with wealth management, I think this is where you would have the concept of the sovereign currencies, you know, the diversified investment, you know, the hedging, you know, digital gold. That's very much in wealth management. And of course, there are lots of derivatives of those products, but that's wealth management, private banking, which of course is a very big part of what we do. The second part would be payments. And this is where things like stable coins would come in. Could they be an alternative to the traditional payments rails that we've been used to for 40, 50 years now? I mean, can there be a world where you really transact, communicate on smart contracts versus the SWIFT, ACH, and other perspectives? And again, when you think of the world of payments, clearly you're talking about trillions of dollars, again, a very big part of the financial services sector. And the third one, I would say, I would put under the title of tokenization. I think this third one has to do with markets, capital markets, trading, collateral. Again, it's a very big moat within financial services because it's the way potentially people finance, potentially people lend, potentially people do everything in the financial services arena, you know, that we do. So when you add these three up, you know, wealth management and payments and tokenization, I think you've got the entirety of the financial services ecosystem, which means that what's happening is truly, if it were to take off, if the ecosystem were to be large enough, a true update, different version of everything, in my opinion, that banks and intermediaries and everything are doing. So pretty important. On that, Sebastien, of course, on the tokenization front, which is, you know, I'm a capital markets professional, so I spend a lot of time there, and of course, so is Euroclear. Tokenization is where we also met. Maybe you can share a little bit of Euroclear's perspectives on tokenization, because you guys were very early in seeing this opportunity, and you've done a lot about that. Maybe we go a little bit deeper in tokenization.
Sure, Elif. I thought it was a one-way interview, but we can do it a two-way interview. That's perfectly fine. So on the tokenization side, absolutely, we started with a digital financial market infrastructure that we launched a few years ago, and where initially the interest came from multilateral banks, and we had a few issuances that were fully tokenized using that platform. We have seen a move towards more commercial banks as opposed to multilateral banks issuing on the platform, and I think we see more and more of them, but in percentage terms, it still remains relatively low. That said, Euroclear also has made a couple of investments in other companies, one in Singapore called MarketNode, another one in France called Isness, and both of them also are looking at the tokenization process for investment funds in particular. And if I had to say what are the two areas where I see probably more interest in tokenization. One is around money market funds, and we can definitely see that globally. The second one is more around the tokenization of time deposits. So these are really the two areas, because at the end of the day, those two instruments tend to be with an underlying which is still cash. And I think that that's probably where today there is a lot of interest. It is to tokenize investments that have an underlying that is very close to cash. Let me ask you a second question, Elif, which is, you know, the subject here is the trajectory of financial services. So what can you see in digital assets that could shape the future of the trajectory of financial services?
So I think distributed ledger as a technology clearly has certain aspects that objectively are superior, right? I mean, the concept of smart contracts and the fact that you can program certain processes, the fact that you can have it 24/7 uninterrupted, and you can have it much cheaper, right? So objectively, I think it's obvious that technology has superiority. But I think in history, we've seen that technology alone isn't enough. It's not always the best technology that becomes the norm, right? I mean, that's not how evolution is. There are other things that come into play. And I think when it comes to financial services, because of course, you know, there are other uses of distributed technology in other commercial terms, but focusing on financial services, I think it's very important to see whether there could be a world of liquidity. Because at the end of the day, when you really think of financial services, the most important thing is, do you have liquidity? If you don't have liquidity, it becomes niche, people don't use it, it's not like relevant. In order to have liquidity, you need to have things like interoperability, interconnectivity. You need to have a world, even if it's not the entire world, you need to have a critical mass that actually talks to each other. And I think today, when you look at that, where that exists, I think it exists in the permissionless public blockchain. I think it exists in BTC. It exists in Ether and those types of things. But when you really think about other structures that we're talking about, like stablecoins, like tokenizations, I think we're still far away from, you know, that ecosystem and how we can bring liquidity to on-chain, which is not going to be easy, because of course there is an existing world that provides liquidity that's is not going to want to let go of that liquidity, obviously. So I think that transition is something important to watch and to see whether that transition is happening. And that transition is happening maybe via bridging TradFi with DeFi so that you can have maybe less resistance. And again, Sebastien, on this point, again, one of the reasons why Bank of America and Euroclear have always worked together has been, you know, this philosophy that you had, that it's great to have this shiny object here, but the shiny object isn't really traded much. So in order to make it more tradable, maybe you create a bit of a bridge to where the liquidity is, which is, I think, how you've always looked at tokenized issuances, why people, you know, chose your company, because when you issued, you could go to the other market and you didn't have to pay a liquidity premium, etc. So maybe you can share your experiences of how easy or difficult it is to get this interoperability.
Right, Elif. So on that front, at Euroclear, when we talk about digital assets, we look at the custody of digital assets, the issuance of digital assets, and we talked about tokenization, and then we also look at the network effect. And that is really what you're referring to, where I think it's extremely important not to create fragmentation, because as you mentioned, rightly, the liquidity is the nerve of the game. And if you don't have liquidity, your assets can be trapped and they might actually be difficult to use. So how do you ensure that you create that interoperability between first of all, various alternatives that might exist in the digital world, because not everyone necessarily wants to issue on the same platform. You already have multiple platforms, tens of platforms available, and people want to issue on a specific platform rather than another. So how do you ensure that you don't fragment the issuance to a point where actually you don't really have the fluidity and create the liquidity within the financial market? So the first thing that, as a financial market infrastructure, we think that we should be able to do is to provide this network effect and to connect all the various infrastructures, digital infrastructures, between themselves, so that you can have an entry point in one, but it doesn't mean that you're restricted to that one, and you can start to exchange those assets with people who are on other platforms, number one. But also number two, because today, as I mentioned, digital assets, when you look at the issuance of digital assets, yes, it's growing very fast, but it still remains a relatively low percentage of the overall assets that are being issued. How do you ensure that you connect the digital world to what I would call the traditional world? Because that's where collateral management is happening. That's where a lot of the liquidity is still happening. So how do you ensure you create that bridge between those two worlds, the new digital world and the traditional world? And again, that's where a player like Euroclear can play a role, and through our digital financial market infrastructure, DFMI, we connect actually that digital world to the traditional world, and people who issue digital assets can actually, and the investors in those digital assets can use those assets as if they were issued in the traditional world. And I think that that's what makes it relevant, and where people can actually start to leverage digital assets issuance much more than before. Let me move on to the third question that I have for you, Elif, which is, we've had a conversation here, and we are in Europe. So tell me about, what do you think that this conversation could have as terms of implication for financial services companies like yours in Europe? So what's the impact that you envisage for Bank of America, but for all financial firms in Europe?
I think I'd like to approach this question from the perspective of the role of regulation, especially in connection with the network effect that we talked about, the interconnectivity and interoperability, because clearly there is a governance and regulatory component, because we're talking about financial services, which are highly regulated, sectors and subsectors. So therefore, it's quite important to look at regulation and I think also competitive regulation around the world. What's interesting to us from a European perspective, of course, is MiCA. I think is the first of its kind in terms of a comprehensive digital asset regulation that's not focused on one product, for example, the way Genius is from a stablecoin perspective, but I think MiCA is a little bit more comprehensive in the sense that it covers everything. Let's say that has a distributed ledger nexus that could be in this digital blockchain type rail mechanism, which I think is helpful. And of course, even though now it's under, I think, some kind of a debate, there's been this concept of being able to passport, right? The fact that 27, if you were to get licensed in one, it's relevant, in the others. But again, I guess there are some discussions on that. So let's see where that lands. So, and I think also, Sebastien, interestingly, we see Europe as potentially the prominent area where CBDCs are still topical. And I know that later on there's going to be this discussion about stable coins and CBDCs, and majority of the crypto community hate CBDCs. It's very much a stable coin world. But I don't think it's that easy to get rid of the concept of CBDC, because if we're talking about a digital dollar or a digital euro, there is a question to be made. Hey, then why don't we have the real thing, right? So, and of course in Europe there is still that, because ECB is still, piloting, and I guess also from a European perspective, because maybe Europe could be seen as a little bit later from a euro-backed stablecoin perspective, given that like 99% of the stablecoins in the world are US, and back to our network effect, likely to grow just because I don't know that you need like hundreds of different types of stablecoins necessarily. So in Europe, there is that. I think what is also relevant is the competitive aspect, though, right? Because Europe was a leader. Europe tends to be a leader in regulation, and they were also in this one. Then, of course, Genius came, and then we see, a lot of activity, especially in Hong Kong. Less on the mainland, but certainly in Hong Kong, certainly in the Middle East, especially UAE, Singapore, etc. And I think it's important to sort of take a look at that competitive dynamics and ask the question, will the developers come and invest in Europe? Will the protocols be introduced in Europe? Will Europe, on a competitive basis, be attractive? Because with innovation and with money, there is fluidity, right? I mean, it will be all around the world. I think this is where, there I'm sure is ongoing conversation around being able to attract innovation. Again, I would love to have your views because we're a US firm. Of course, we've got large European presence, but we're a US firm. Euroclear is very much in the center of Europe, and you really touch everything Europe. Would love to have also your take on MiCA and how it's affected you and what you think the future of MiCA could be.
You're right, Elif. The hint is in the name on your side and on my side.
Exactly.
That's very true. But coming back to at least what I would say is that I see more and more public interest in digital assets. And I think that that's a first step also, which is important. It's not only the private sector, it's also the public sector. To give you two examples, in the UK, you have the concept of Digit, where the UK authorities are keen to launch UK guilds in a digitized form and see how that could be rolled out. And you have a little bit the same logic now in France with commercial papers issued by the French debt authorities, which also would be only issued digitally. So you can already see a couple of, let's say, large institutions that are very keen to leverage more the use of digital securities. But when I look at it from my perspective, for an organization like Euroclear, well, we are neutral, we are open. So my view is that we need to be able, as an organization, to safekeep CBDCs, stable coins, cryptocurrencies, and be able to settle all transactions, whether they, by the way, are digital or non-digital asset transactions, using these new type of underlying currencies, if you want. So I'm completely, and I want to remain completely agnostic as to which one will prevail, because people have different perspectives. But as an infrastructure, your role is really to be able to support wherever the market goes. And I think that that's the ambition that we have.
Yes.
Well, I think that that was a very short interview or conversation. I hope you enjoyed it. Elif, thank you very much for your time.
Thank you so
much.
And
it was a pleasure spending 20 minutes with you today. So thank you.
Thank you. Thank you very much.